type, type that you can hear, so we can go ahead. Yes, yes, we can. Okay, good. So today I'm going to be talking about something very important. I mean, a very, very important concept of the market. That is how you trade. You know, some people don't trade with liquidity, right? A lot of people don't trade with liquidity, and they are very, very profitable. And some people trade with liquidity at the same time, they are also very, very profitable. So I'll give you guys one or two information, and then straight we can go to talking about what's very important about liquidity, internal and external, and then we are going to be talking about choosing the right point of interest. Now, if you understand liquidity, those people that trade without liquidity are making a lot of profit too, but their executions are always going to come below liquidity level. You understand? Automatically, from the way they've learned their concept, that their execution is going to come below liquidity level or above liquidity level. Now, what is liquidity on its own? I don't do complex explanations. Remember, I don't say liquidity is where retail traders place their stop losses so that I'm just going to tell you what you can see on the chart and say this is liquidity. The definition doesn't matter as far as you can identify. That's why ICT used to say we are not teaching you trading to what to cram or you are teaching how to see. Just learn how to see it on the chart. Anything else is just long explanation. Nah, cho. Just know how to see it on the chart. So everybody knows we have three market structure, which is the uptrend, the downtrend, and what the consolidation. So in any uptrending market, for example, this is an uptrending market. The most recent higher low, the most recent higher low is liquidity. And if you pay attention, this is the most recent. Let's say the market is trending to the upside like this, yeah? Oh my God, I'm coming. How did I not? How did I do this, man? This is an uptrending market, right? So the most recent higher low in this uptrending market is what is your liquidity. Meaning this is your liquidity. You'll be expecting the market to drop down, take out this low, and then continue to the upside. Now this is what an internal liquidity, right? So anytime the market is trending, we said the most recent higher low or the most recent lower high or whatsoever it is what is liquidity. So what we mean is the market is trending to the upside. This is the most recent lower high, right? Higher low, sorry. The market is going to take it out as internal liquidity. Then the new high that the market created here is external liquidity. They'll be expecting the market to grab it. That's what brought about the theory that the market moved from internal liquidity to external liquidity. And it's accurate and it works that way. That's exactly how it works, right? So when the market is trending to the downside, it happens the same way. If the market is downtrending, right? The most recent lower high is liquidity. Once the market goes up and grab it, then this is now external liquidity. This is your internal liquidity. Market is going to take it out and drop to take out the external liquidity, which is correct. Very accurate and very correct. All of us know that it is very accurate and it's very correct. But now at the same time, let's do something, right? Let's do something. So if that is a theory that you can use to capitalize on moves, right? If that is a theory that we can use to make a lot of profit, now how do you now put it into the chart correctly for you to make that amount of money? See, if you are blending the right liquidity, right, you need to blend it together with choosing the right POI. For me now, I have learned how to choose POI to the extent that it is my POI that is going to valid, that is going to tell me the valid liquidity. That is how much I've been into the charts. Like when I choose the right P1, automatically the right liquidity is going to be there. Or if it is not there, then I choose way above. Now, how do you choose the right PY? Let's talk about structure a little bit. Now, if you want to understand structure, I repeat, we primarily treat three types of structure. Now, the first type of structure for a cell is this one, which is the normal structure everybody's know. Then we sell from here. So this is the QM or depending on where we choose our POI, remember. So this can be the POI and this can be the liquidity. And this is a very beautiful structure. This is the first structure we trade. Now, how does the second structure we trade looks like? It's still the same thing, but we have one break of structure. But before that one break of structure, we're going to have a mini break of structure. Then the market does something like this, right? This is it. But it's the same thing. Why? Because we have a small break of structure before the main break of structure. Then we still execute from the same zone. And then we still have this particular thing as liquidity. Quite all right, right? Quite all right. Then the next and the final structure is this one, which is the one for the continuation setup. It looks what? It looks like this, right? Market breaks, market pullback, market give you the entry like this. Very important. Can you see that? Market do something like this. Now, these are the three structures we are focusing on, right? So, but sometimes when we go deep into the chart, for me, that I've experienced so many things. I introduce the doctor system with or without liquidity, everything looking so different and tasty with high earnings, right? But then if you take a look at these three structures, if you take a look at these three structures, now two of those structures can happen along a move. I'll explain what I mean. I'm trying to get to the point of choosing the right POI. But all of us know about internal and external liquidity, right? I'm not going to make too much explanation. Internal liquidities are the ones we use for entry, while external liquidities are the ones we use for target. For example, in this structure, this one is an internal liquidity, and this your target is for an external liquidity. This is an internal liquidity, this is an external liquidity, this is an internal liquidity, this is an external liquidity. Very simple. And we have different types of internal liquidity. I'm not going to make too much noise. Internal liquidity can be structural liquidity, it can be inducement, it can be Asian high, it can be Asian low, it can be previous daily high, it can be previous daily low. All these are types of internal liquidity, but internal liquidity now internal liquidity. And there's always an internal liquidity inside a fair value gap, which is something I've explained in my previous free classes, right? So an external liquidity can also be different. It can be a trend line liquidity, it can be equal highs and equal lows, it can be Asian highs and lows. The same thing for the other one, but we don't have inducement and structural liquidity for external. But external can be trend line, which is very important. If you saw it, you see a trend line, you'll be expecting the market to clear it. So all these ones, just know that external liquidity are where we target, internal liquidity are those we use for entry as far as you are trading structure based. You understand? Then these are the three structures we are focusing on. Now, how do you now choose or select the right point of interest? First thing first, for me to choose the right point of interest, I want to choose a point of interest that is overlapping with the higher time frame key level because my own point of interest I use at key levels, right? So that your point of interest, you want to see it overlapping with the higher time frame key level, meaning depending on your storyline, right? Now, let's say for example, you have a daily storyline. Let's say daily storyline. Now you want your point of interest to be overlapping with the H4 key level. Your POI, if that your POI is on the 30 minutes time frame, you want to make sure that that POI is overlapping with the H4 key level. Now, that H4 key level you chose because you have a daily storyline, it's going to give you this structure to make sense automatically. When we go into the chart, you understand what I'm saying. You understand what I'm saying? Now, for example, you have a daily storyline like this, and you have the H4 key level as your POI. That's where you want to see your entry come from. That's where you want to see your entry come from. Now, let's say you have a weekly storyline. You want to see your entry come from like the D1 key level. It's going to be your POI. But that doesn't mean that your structure is going to be on the D1. But that your POI you are choosing will have to come from D1. If you are someone that trades lower time frame, for example, let's say H4 storyline for those people, then you're going to have your H1 POI. That's what you want to see, right? But even if you're using a 15-minute break, what I mean is if you are choosing the correct POI, liquidity is going to be there if you are doing it correctly. That's just what I mean. For example, yesterday we had a class with my students and we went through let's say we went through Ethereum. I asked them to choose any pair. They should choose any pair, and we are going to be going through it using the concept I taught them, and we are going to see what the market is doing. And today we are going to continue exactly from there. But I'll show you guys how what we've seen on the chart so far. We analyzed together with them, and we are seeing past price action, looking at exactly what the market is doing that yesterday. So I don't know, is it this one that we use? Now, this is the one we use. Just take a look at how we are breaking down Ethereum bit by bit. The losses, I show them. The wins, I show them. Now, for example, let's go into this. Let's go into one of the trades. I'm going to be looking at one of the trades, and then we're going to be seeing what the market did right there. Now, this was my yesterday class at night. Now, let's take a look at this particular trade right here. Just pay attention to this little trade that happened right here. If you take a look, this is the structure I just explained, type 1. Am I correct? Quite all right. I'll delete this so that it will not make too much noise. This is the entry. Can you see the line there? Now, what happened here? This is the sweep of liquidity of that thing. This is the break of structure. This is the sweep of liquidity, the break of structure, and what? The structural liquidity. But now, this is on the 1 hour time frame. This POI is the 1 hour time frame. Now, what is making this POI valid and high probability to make sense of that structure? This structure type 1, clear. Everybody can see that this structure type 1, right? This structure type 1. Sweep of liquidity, break of structure, structural liquidity, the entry. And anytime I'm trading a POI, if it's going to be a bullish POI, I'll talk about that when we leave this particular trade. Now take a look at this. Now let's go into the H4 time frame. Let's take a look at that same POI. Take a look at that same POI. Can you see that same POI? What is this? That same POI is what? Is a 4-hour key level that was refined. So this is what is making a point of interest valid. They need to be, we have a daily storyline. Yes, we did have a daily storyline right here. You can see the line that is coming from it was a rejection. Daily rejected daily. We have a daily storyline. So your entries should come from the H4 key levels, even if they are coming from the lower time frame refinement. If not, you're going to get it wrong. For example, if you're choosing a 15-minute point of interest around here, right? You can have some sort of lower time frame structures around here. Yes, on the 15 minutes. But choosing the point of interest right here on the H4 time frame is going to make the entire structure make sense. That's what I mean. If you take a look at the other trades, you see that where is this entry coming from? H4 key level. But on the H4, it doesn't make sense. It doesn't make sense on the H4. It doesn't make sense on the H4, but the entry is coming from the H4 key level. But if you go into the H1 or the 30 minutes, it will make sense. That structure is going to be there. But you choosing the PY is going to come from the higher time frame. Can you see that? Look at that structure. Hey, doctor, this is not the structure. Okay, bro, look at this now. What is this? We have a sweep of liquidity. So this is already an engulfing candle. So I've already taught this. This is an engulfing candle. So this is a sweep of liquidity. But if you are structurally speaking, this is also a sweep of liquidity. Am I correct? Now this is a break of structure. Am I correct? Now, this is an internal liquidity. I think I said it at the beginning of the video that a fair value gap is an internal liquidity. So the low here is liquidity. Then we executed from the QM. So that is that structure I drew exactly. But the structures are never going to look exactly the same. But look at this. But on the H4 time frame, did this particular thing make sense? No. But where was the POI coming from? H4 key level was refined. So it needs to make sense. Your point of interest needs to be chosen clinically, right? So if you're in the daily storyline, your entry time frame your entry key level should be coming from the H4 time frame. Even if you are going to have a H1 structure or a 30-minute structure. If on the weekly time frame, your entry key level should be coming from the daily time frame, even if you are going to be having a H4 structure or a H1 structure. Quite all right. But if you take a look at it, all the entries are coming from those time frames. Take a look at it very well clinically. You will notice this one, the entry was coming from the daily. Yes, this one, you can see monthly, reject monthly. We did some sort of analysis yesterday. That's what I'm saying. Can you see that? The entry was coming from what? From the daily. But it was refined on the H4. On the H4, you can see that's why it's looking like this. But this is not going to be a problem because I've released a video before that about the basic doctor system, and I said if the apex is not fresh and the QM is not fresh, use what? The OCL. So that's why you see something like this. So nothing too much, yeah. So that is about this. So now I've given you guys a little information that says, let me go back to this. I've given you guys a little information that says now choosing the right POI plays a significant role on the market. And if you choose the right POI, now the structure on the lower time frame is going to make sense because these structures, for me, that is I'm an intraday trader. I'm not meant to see these particular structures on the high time frame. Quite all right. I'm not meant to see these structures on the daily or on the H4. But based on candlestick structure, you can see them on the H4. Quite all right. Yeah. So what you basically do is when you have a daily storyline, you want to see a structure on the H1. You want to see a structure on the H1 or M30, but that your entry key level, you want to see it coming from the H4. That's all. Nothing too much. Nothing too much. And once you have an overlapping key level, a key level is overlapping off of the daily, off of the weekly, off of the H4 as an engulfing buy and as a structure, then you are trading against the market direction. For example, and let's take a look at gold. All my examples are usually going to come from gold, which is the pair I love the most, that is giving me the most money. Now, let's take a look at gold, for example. Let's go into the daily time frame, right? Now, if you pay attention, there's an information I always used to give my students. I'll say it there. If I want to look for a swing reversal point on the chart, I look forward to anywhere the market gives me an obvious liquidity on the daily or probably usually on the daily, overlapping with an OCL, Can you see that? So once I have this obvious liquidity with this OCL, it's a what? It's a swing point where I can take swing trades. But maybe I want to trade to the other opposing end. I'm not going to automatically take my trade from here. I'm going to box this and I want to see a POI that makes sense on the lower time frame. That's what I want to see inside this particular week. Now, I'll pass on an information. We have 3 beautiful POIs I use on the chart. One, the first POI I always use on the chart is QM. And anytime I want to trade a QM, it doesn't have too much validity, but it's going to be high probability if it's overlapping inside an OCL. So if I have a QM that is overlapping inside an OCL, I'm sorry, a fair value gap, it is high probability. For example, take a look at this QM, right? You guys remember when we took this cell in my previous videos, right? So whenever I have a QM overlapping inside the FVG, it is making it high probability. Why? Because there's going to be liquidity. The low of this FVG, since it's a bearish FVG, is going to be what? Liquidity automatically. It's not like it's liquidity. It is always liquidity because if you go to the lower time frame, you're going to see the liquidity obviously. So rather than us going to the lower time frame, we already know that higher time frame fair value gaps are lower time frame liquidities. So we don't need to stress ourselves. So it's a form of internal liquidity. Can you see that on the H4 time frame? So the same thing, even if you mark out this, if you go to a little bit more lower time frame, you're going to see that that place is liquidity. So rather than stressing ourselves, since we know that from the higher time frame, we don't need to go to the lower time frame to make sure that that particular thing is liquidity where you can always, right, see it. You can see it. So there are always liquidity there, right? So now the point of interest I use are QM. QM, not necessarily, it doesn't have too much criteria to be a valid QM. All you need to see is if it is overlapping with FVG, cool and quite all right. That's the first POI I use. If it is not, but it has liquidity, quite all right. So, secondly, is Apex. Apex can be V or A shaped key level. It can be support or resistance. The ones I trade are the ones that are engulfings, an engulfing buy candle or an engulfing sell candle. And a lot of people have been asking me what an engulfing is. An engulfing is a candle that takes out liquidity and breaks structure, but not always breaks structure. As far as they're taking out liquidity, I'm okay and I can call it an engulfing. For example, this. Now you can see the way this candle take out this low. This candle here takes out this candle low. Now, immediately it takes out this candle low. Now, this place, this key level is an engulfing for me to take a trade. It's an engulfing. So if the market did not tap it and went all the way up, create a structure to come here, then this is a very valid high probability point of interest, right? So now the same thing, the same thing that happened right here. Look at this. This is an engulfing. So if you have a point of interest, something like this is also an engulfing, right? They are what? High probability point of interest, right? Okay, so I take that particular zone very seriously. So it's just an engulfing. That's that. If I want to take an apex, it must be an engulfing, but it is not always because you can have low probability trades and they are going to go well. Other points of interest that are not engulfings can go well. And they could go and they're going to give you a lot of money. Yeah, quite all right, but I am not interested. The zones I want to take a trade from need to be an engulfing, right? Now, the final one is an RBS. For example, this. If I want to take a trade from an RBS like this, right? This one right here. I want to see it overlapping inside an FVG all the time. Can you see this? FVG. I want it must be, as far as I want to trade an RBS or an SBR, it must be overlapping inside an imbalance, or there must be imbalance above or below it, depending on the type of RBS. I will explain. The ones that are coming with imbalance above them are this. Okay, this one is not the type. Am I going to see this thing? This is on the daily, yeah. Okay, now this type. Can you see? Now this one is an RBS, but what? The imbalance is above. It is cool, this type of RBS. But if you see this other type of RBS, this one right here, now the imbalance is what? Is across. You want to see the imbalance across, something like that, right? So these are the 3 points of interest I trade, and that's what is making them high probability. One, apexes need to be engulfing buys or sell candles. QMs, I want to see them overlapping inside the imbalance, but not always. They are cool. They are very cool anytime as far as they have liquidities around there. Then finally, the RBS or SBR, there must be overlapping imbalances. This is what makes them high probability. Very simple. So a form of a way I take swing trades is when I have liquidity inside the OCL. Now this OCL is on the daily time frame. So when you switch into the H4 time frame, you notice that that same OCL right here, look at it. That same OCL is an engulfing by candle. Then I'm not stressing myself anymore. Zero stress. And then another important thing right here is you need to pay attention and know that okay, this particular RBS here is an engulf. This is what a 14B, and the 14B is a clear, clean, beautiful continuation setup. Can you see that? An RBS 14B. So this now makes a lot of sense for you to aggressively place a limit order here, and the market boom, and then the buy started, and you're taking profit off of the next daily key level, which is right here. Can you see that? A very simple approach to the chart. And everything there makes sense. So you'll be like, the market is just dropping, and you'll be like, oh, how did this buy come to take place? Nothing too beautiful, nothing too significant. A very simple approach to the chart. right? So now let's go deep into the chart. Let's talk about now how are you going to combine that structure, that's choosing the higher time frame point of interest, and that's everything. You understand? How are you going to blend them together? That okay, choosing the right point of interest. Now, choosing the right point of interest is going to make structure make sense automatically. I've mentioned that. As far as you choose the right point of interest, the structure is going to make sense. So first thing, I'll look for a particular trade or pair. We're going to create a storyline and then we're going to choose the right PY and let's see what makes sense. So I'm going to go to a random pair. Maybe I'll choose something like Euro JPY. Those are the pairs I don't know too much of. And then we're going to see what's happened on this particular pair. So we'll try to establish a storyline first. So let's go into the weekly time frame or the daily time frame. So we'll see what is going on. Now, let's take a look at this. Now, first thing first, right here, you notice that we have a shadow rejection. Okay, I don't know, people don't know too much of shadow reject. Okay, let's use daily. Let's use daily. Now, this is on the daily time frame. Quite all right. Now, just pay attention to the daily time frame. This entire daily time frame here just makes an entire sense, especially if you are blending it together with the weekly. Now, let's just use the weekly. I'll use it as an explanation. Now, there was a formation of CRT right here. Let's just use that. And once the market creates a CRT like this, we are paying attention to the market, taking out the next external low, which is this. Now, that is our target. So, after we have the formation of this CRT, I don't know if the left hand side we have any other thing. Maybe we are at all-time highs. Maybe we are at all-time highs on this particular pair. Yeah. So, once we have the formation of that CRT, there is something within the bias that is not too significant. I'll say it. Now, once you have a weekly storyline, doctor said, or let me say, not me, let me remove myself. The doctor system has been proven to say that your next execution point is going to be based on three scenarios, right? The first scenario says if QM and Apex are fresh, use the QM. If QM is not fresh, use the Apex. If QM and Apex are not fresh, use the OCL. This is a very simple thing. And this scenario applies to the time frame that is the time frame you are going to be looking for your breakout. So what we have here is a weekly reject. So we have a weekly rejection. So on the daily time frame, we're going to be looking for something very important. Right? That's just the basic idea of the doctor system. After the shadow rejection, everything that happened, just look at this. Right here, we have a sweep and a break. Very simple. And I always used to tell you guys that see, anytime you have a certain direction, you are looking, if you want to use the most recent breakout to look for your direction, you are not looking for a type 2 breakout like this. This is a type 2 breakout that happened inside a structure, and you are not interested in that. But you can see this is a type 1 breakout. And what? This is also a type 1 breakout. No, this is a type 2 breakout, but this is a type 1 breakout, yeah? But this here is a type 2 breakout, which is not significant. So if you take a look at this thing, after the shadow reject and the breakout right here, what do we have? Look at the entire price action. Let me cut here. Look at this entire price action after the breakout. This is where the breakout happened. What do we have? How do we choose our POI now? Automatically, how do you choose your point of interest? You have a weekly storyline and a daily breakout. So you know that your entry time frame must come from your daily time frame, or entry must come from the daily key level. Definitely. You can have a structure on the H4, you can have a structure on the H1, but they can give you invalid or incorrect point of interest. But once you choose your point of interest from the D1 and you refine on the H4, H1, then you're going to cap it clean. Now, this apex here have been mitigated, so we are not using the apex. This QM here is fresh, so we can use the QM. Simple. Why are we not choosing point of interest here? Because this is our liquidity we are looking forward to, and this is where the breakout happens. Now, this particular zone you marked out, you can refine it on the lower time frame. But do you know, since you pick this your point of interest from the higher time frame, inside here on the lower time frame, you are going to have a lot of structures, and that is where a lot of people are going to be taking losses. Why you are not going to be taking that loss? You are not. Now let's look at this on the high time frame. Let's see. Let's go to the H4 time frame. Now let's go into the H4. Now the H4 time frame, can you see? Look at this on the H4 time frame. Now you're going to be refining this your zone on the H4. Look at the entire structure. Makes sense, right? Right here is a sweep of liquidity. quite accurate. Right here is a break of structure because we are trading structures. We are just trying to make them make sense on the higher time frame. Right here is the structural liquidity. Makes a lot of sense. And you're in line with the weekly storyline, right? And you picked your point of interest from the daily, which is here. Now you are refining on the H4. You refine here, right? You refine what? Here, which is cool. Now you say it has been used on the H4 time frame. So maybe you're going to be trying to refine here, which is not being used. Look at this QM right here. What happened here? Just look, overlapping inside this imbalance. High probability QM. Simple, accurate. Look at the entry. Can you see that? So now what's the breakdown? What's the ideology behind this trade? Weekly shadow reject, which is a weekly CLT, meaning we have a weekly idea of trading, daily breakouts, give us double breakouts. You marked out your entry from that daily and you patiently waited for the H4. You refined on the H4 to a structure that makes a lot of sense. Then you are peaceful. That's why, blah, blah, blah. See, if I show you my DM, I swear I'm not bragging. Whenever I post my trade, you'll be like, God, I feel they control this market. I am not. I cannot be controlling the market. It is just the algorithm that I've studied, we've seen, I've been taught, and I've used what I've been taught, and I've studied it on my own, and I've seen that's exactly what the market is doing consistently. Why can you not wait? Most of us are not just patient enough to wait for this thing to happen. Just be patient enough and see you catch it. And I also take losses a lot. I also win also a lot. I'm very average, but at least being average in the industry makes you the guru of the market, right? So, and that's what brought about this entire trade. Internal structure came to play. Internal liquidity as for entry, external liquidity as targets. QM that was chosen from the daily. So choosing the correct point of interest plays a role. Now, if you're now looking at inside here, they'll say doctor said an engulfing sell candle. So we have a sweep of liquidity right here. So we have a break of structure right here. And then we have this as a structural liquidity. Doctor, I did this and I hit SL. This is my POI. Why? Why will you not hit SL? Why will you not hit SL? Structure is also always going to be there, but your point of interest you are choosing would have to be coming from the higher time frame. So the structure is going to be in place. So once you choose your point of interest correctly, structure is going to be in place. Hey, it makes sense, makes sense, makes sense. Yep. That's the same thing I'm teaching you guys for free. No penny, nothing. Nothing, bro, nothing. Just take your time to study this shit. Nothing too difficult. Take your time. Just see. If you learn pattern, if you're trading pattern that they taught you that this is a structure type 3, and you just wake up in the morning and every day you're looking for structure type 3, you regret. But once that pattern, you wait for it to happen around a specific price, meaning there is a logic behind that pattern. You wait for it, for example, you wait for the market to come. And for example, you wait for the market to give you a daily reject daily, a H4 breakout. Then I told you to choose your POI from the H4. Choose one of this particular POI. Then you refine it. Then you are not going to be bothered about all these structures. They are not going to deceive you. But once you are taking all these things inside here because they said this, they said that, market goes scatter your stop loss. Even this idea we are using, we take losses. But what? The wins are more than the losses. So I'll give you guys another example. The first trade I took on Monday last week was this, and I'll use it for an example. Now, it was a 14B. I'm not going to share that here. But yeah, it was a 14B, if you guys remember. I took 2 trades on German 40 last week, and all of them were clear wins. And take a look at this. We have a rejection from here, then we have an engulfing sell candle, and then we have this as a structural liquidity. Now look at this structure. I posted it. You can go see the execution and everything. I posted it on my X and I think on my Telegram channel. So this was the execution right here. And if you remember, the target was here. But I closed out, and the next day I caught a very beautiful continuation. Let me mark it out, then we can explain in the next 3 minutes. Then the next day I caught a continuation here. And remember what I said. I told you guys that anytime you are taking a trade based on RBS, there need to be a fair value gap below or across. Was there a fair value gap below and across? There is below. Then this is my liquidity. And this is exactly how the trade was taken. If you want to prove me wrong, go to my X, go to my Telegram channel if you think, go and see the execution. And I know most of you already follow me, so the executions are already there. Then I place my stop loss above here. Then I targeted the next daily key level, which was around 8R, if I can remember. Now, these were the two trades I took. Now, look at this. This is a higher time frame structure. Am I correct? But this is a 14-day form of a continuation setup, so it's cool, right? So we have everything. This is an engulfing sell candle, and that is why I used it as a point of interest. Do you see the entry? Now look at the second German 40. This is the RBS, and this is the structure type 3. I just draw out at the beginning of this video. Makes sense. Now look at this. Look at this. Let's look. Where was my entry chosen from? Daily OCL. Can you see that? I refined the daily OCL into a continuation setup. Hey, doctor, how are you taking this interest? Bro, just take your time and do this thing. The daily OCL was refined into this. So once you are choosing your POY correctly, you're not going to you're not going to be disappointed, man. You are not in any way going to be disappointed. Yeah. Someone say I should show execution. I'm coming. Someone on TikTok says, Doctor, show execution. I want to show him on my other phone. So I'll open my sorry guys, we'll end the class here. I'll post the video probably. People want to try to prove me wrong, and you know me, I'll show evidence. He says, not this guy. I will show execution. So this is my Telegram channel on my other phone, yeah. You know me, one thing, I've already told you that nobody can drag me on media. And the reason is because everything I'm doing is backed with what? It's with